Good day, good evening, good morning, from wherever you're watching us from. My name is Ronald Kazadi. Welcome back to my channel, Think Trading and Investing. And if you're new at this channel, I would highly recommend you to subscribe as I'll give you more information and more steps on how to build your investment and trading portfolio. Now, without further ado, let's get to today's topic. Now, for some of you, you might have heard of investing. Well, when you think of investing, you always think about stocks, cryptocurrencies, properties, or real estate. But today I want to take a different angle. Yes, today I want to show you how newbie investors like you can start with little amount of money and build. So, how can you begin just like how I began? So, the first things first, you need to know what are your goals that you want to achieve. Do you want to make, first of all, you need to understand what are your goals. So you need to write down what are your financial goals. Is it to buy a new car, to buy a new house, or is it to reach millionaire status by a certain age? First of all, you need to have a number. This is what I call a financial freedom number. So, what is that amount of money that you think you would need to help you to achieve your goals better? Because if you keep saying, ugh, I want to be a billionaire, ugh, I want to be a millionaire, and everything is just vague, and you really don't have that amount written down as to say, you know what, this is financial freedom for me. This is financial success for me. I can guarantee you're going to keep on singing the same song until you're 60 years old. So first of all, know your goals and know how to achieve them. So it's better of saying I want to make $1 million in 30 years time, but how are you going to achieve it? Numbers matter, and especially compound interest, which is the wonder of the world, as Einstein put it. So all of these things, you need to put them down, you need to jot them down, you need to have a concrete plan on how you're going to achieve these goals. Then I've got three type of investors today. Firstly is the beginner, secondly is the intermediate, and thirdly it is the more advanced uh, investor. So, well, the first type of investor is the one that is beginning. So, when you're starting, it's very important for you to know the type of skills that you need. For an investor, for instance, you need to know, okay, fine. If I am going to invest in cryptocurrencies, what are the skills needed to understand or to better myself in an environment where crypto either makes good money or crypto is about to crash? Without the right knowledge and skills, you will be driven with emotions. So, for instance, you all saw how crypto went up to, I mean, Bitcoin went up to $70,000 earlier this year. Now, there were some who, when crypto reached that amount, that's when they decided to invest at that time. Why? Because they were driven by emotions. And when they made that decision, what happened? The adverse happened. Crypto crashed. Now, why am I saying all this? Because they didn't have the knowledge, they didn't have the understanding that in any market, be it crypto, stocks, there's a bull market and there's a bear market. There's a time where it does well and there's a time it crashes. And it does not make investment sense for you to invest when everybody's optimistic. That's why Warren Buffett says, be fearful when everyone is cheerful and be greedy when everyone is fearful. So those are the type of skills that you need. You need to understand that, you know what, in this environment that I am in, and these are the sides, or these are the ways, or this is the numbers that I need to be looking at before I make an investment decision. You also need to know the risks associated with buying a certain stock, buying a certain crypto, buying a certain land or properties. No investment is without risk. All you need to know is how is what are the risks, how to manage it, and how to get out in case you cannot manage it. So the best way is you need to invest in yourself first. Now, before you invest any money, you need to start to investing in yourself. Invest in your education. So one of the things I did when I started is to read books, as I mentioned, that I started reading Think and Grow Rich. I also read The Richest Man in Babylon, Rich Dad Poor Dad, Why by Robert Kiyosaki, which is the most famous one, and Why C students work for A plus students. It's all the books I will link in the description below if you want to if you want to read some of them. So investing in yourself not only means books but go to seminars. I've been to various trading and property investment or real estate investment for those in North America, where they talk about how to invest in properties, how to get started, how to expand your knowledge in about the property market. So all this helps you to become a more better investor overall, because now you've got the skills. You're not driven by any emotion. You're not saying, oh, you know what, I feel property is doing well, so let me just go and buy a property. No, that's not what you ought to do. You need to have the skills. You need to know when is the appropriate time, because every investment strategy out there depends on seasonality and oftentimes knowledge. So what do I mean by seasonality? There's always a time where things are doing, one set of investment asset is doing better than the others. There's always that time. For stocks, for instance, they do very well in high growth economic data and also inflation. Well, things like bonds would do terribly in inflation because interest rates are still low. So once interest rates are high, bonds tend to do well and stocks tend to do badly. So every type of investment asset have their seasons where they either do well than others or they perform average. So you need to have the skills to know when it is that season for a certain asset to do well. You need to also have the skills on how to manage the risk associated with all. As I mentioned, there is no investment that is without risk. So it's going to buying books, going to seminars, listening to podcasts, and also YouTube, and especially a channel like us. So I highly recommend that you continue to stay tuned, because I will have more and more investment guidelines and steps for you to make 2022 your year of financial success. So once we've got the skills, secondly, we need the cash. So this is how an intermediate investor would start. Well, the first things first is you need to pay yourself. Now, it is easier, very easy, for a person to make money once they've got the skills in a certain environment or industry. Making money is easy, but when you have made the money, saving it is a problem. And when it comes to investment, cash is king. So investors need to build a cash portfolio. And the only way to do that is for you to practice what we call pay yourself first. So what does that mean? It means, like Warren Buffett says, you do not spend on what you have, but spend after you've paid all, once you've paid yourself first. So what does that mean? It means that before you can start spending on certain things, on your rent or on your groceries or whatever, you need to pay yourself first. You need to reward yourself first. And this is one of the advice that I also got from the Richest Man in Babylon book, which you'll find in the link below. So the advice is simple. Take a certain portion of your money and that is yours, which means that is towards your investment plans and goals. Remember, at the beginning we said that you need to have a plan. So that money goes towards that. So I will not stand here and give you advice on how much you should invest for you. Sorry, you should pay yourself. But the richest man in Babylon gave a guideline for beginners. 10% is recommended. So you take 10% of every money you earn, be it through a salary, a side hustle, or any type of income, and you put aside 10%. Why? Because number one, when you start with investing in properties, when you start investing in property, there will be maintenance costs, which would probably eat up from any investor's pocket. So once you have an emergency fund, you will be able to finance all of those maintenance costs and other costs that arise. And another reason why you need to have an emergency fund is because I know that most of us buy things on credit. So we buy our houses on credit through a mortgage, we buy our cars on credit. So when your job is gone, what's going to help you finance that? Because most of the people, their salary is their only forms of income. So once you've got an emergency fund, you'll be able to continue to pay off all those expenses and more, even when you do not have a job. So what is an emergency fund? Well, it is any amount of money to pay off things that you didn't plan for, or when certain emergencies arise like losing your job, you will be able to have enough cash to cover you in a period of 3 to 6 months. So moving right along to the last type of investor. Now this type of investor, first he has an emergency fund. This investor pays himself first, and this investor has the knowledgeable skills that will allow him to manage and mitigate risks. So, this type of investor invests in various of things like the stock market, uh, commodities market, cryptos, and businesses. Now, many of you will be saying, what does he mean, businesses? Well, businesses are a part of of an investment assets. If you've read the book of the cash flow quadrant by Robert Kiyosaki, and I will link the link I will supply the link below the description. There he describes that the first step in actually moving away from being a salary earning person and a specialized practitioner is for you to move away from that and owning your own businesses. Now, why do I like investing in businesses or starting businesses? Is because with businesses, it provides you with more cash flow than anything else. So when you have a business, as we said, as we mentioned earlier, that when it comes to investment, cash is king. So business owners have so much cash, especially when they've got a business, a business that produces so much cash. They are able to get that positive cash flow that will allow them to broaden their horizon. So, for instance, if you are a income earner, you will probably earn, let's say, a salary of $2,000 to $4,000, and then there's tax. And by the time that tax come into play, you might realize that your money that your net income is less than what was promised before, which is your gross income. And then you probably won't have enough money to figure out what to invest in. But when you're a business owner, when you've got a business, especially a business that is spitting off a lot of cash, you are in that position of saying, you know what, let me invest in this, let me save this. There's more cash to go around with. So don't just look at investments, particularly just with stocks or cryptos, but look at it in terms of also what do I need to do now with as little money as I have or with my savings? Can I start an affiliate marketing business? Can I start a a tutoring business? Can I start teaching online? Can I start this? It's part of your investment portfolio. And then when you have enough cash that is coming from that business, then you can spread it out to various type of investments like stocks and crypto. So in that case, what will be happening there? So you've got you making you money. Either you've got a certain skill set that will help you to make that money. Then you've got your business, which is systems put in place that will be helping you get cash. And with that cash, with that enough cash that you have in the bank, you can now take that money and you can now invest it in various means like stocks, cryptos, whatever investment properties. So that will be money making you money. Dan Locke puts it this way. That is his what you call this? That is his wealth triangle, where you are you've got the various steps in which you need to achieve before you reach financial success. And the last stage is just what I mentioned, where you've got your business making you money, and there you take that money and invest it in various investments. So you need to know where you stand. So right now, for me, I'll be looking at this and saying, okay, what type of investment investor am I? So most of you, if not all of you, will be at the initial stage where you need to invest in yourself. You need to invest in skill sets, and I have got a beautiful description down there, which has got various links to various things that you can look at, whether it be books, and there you can see you can I've got I've got at the bottom of that description I've got links to various books which can help you to begin your investment journey. So right now when you're starting out, investing in yourself might be the best choice, and then from there onwards you can start doing other things like creating a mutual fund, paying yourself first, starting a business, and investing in other investment assets. Thank you very much for watching, and please, I've created a beautiful card just right there on the side there where you can click to watch other videos. And if you truly liked this video, please hit that like button so that YouTube can send this video to more and more people so that they can get more and more insight on how to start investing. Thank you very much and have a lovely day ahead.